Former Starbucks CEO Howard Schultz sending a letter to Congress calling for more federal loan aid to small businesses and partial loan forgiveness. It's been signed by some of the biggest CEOs out there. In it, Schultz writes that, quote, allowing small businesses to fail will turn temporary job losses into permanent ones by year end. The domino effect of lost jobs, he says, as well as the lost services and lost products that they provide, could be catastrophic. Joining me now for more is Gilles Gade. He is the CEO of Cross River Bank. They're the fourth largest PPP lender in the country in terms of loans. That's only after J.P. Morgan, Bank of America, and Wells Fargo. They're giving out more loans than some names like BB&T and PNC. Gilles, welcome, congratulations, and we'll talk more about how you did this in a moment. But first of all, do you expect that we're going to see an extension of the PPP program?
Thank you, Kelly, for having me on the show. Great to meet you. I sure hope so. I believe this is taking a little bit of a better shape than before the weekend.
In terms of the talks and the progress. So tell me, how did you guys wind up doing as many PPP loans with just one bank branch as you did?
Well, it's not about the branch. It's how you access the customers that actually needed it the most. So we did partner with a number of channels, some of them that you're probably familiar with, such as Intuit, obviously Blue Vine, and Cabbage, and a few of others. And they do have access to the small businesses. And we just extended a hand to them by saying, we want to play a role. We want to help particularly the smallest customers that will probably not have access to those PPP loans because they're just going to be forgotten by the big banks. And so we sprung into action. We rolled up our sleeves. We put everything that we knew thus far in terms of technology, compliance, operational efficiencies, and we put it to the contribution of this program. And this is the result.
Yeah, and you've gotten a lot of press coverage as a result. The New York Times wrote you guys up saying you're the tiny bank that got pandemic aid to 100,000 small businesses. In normal times, you do partner with companies like Affirm and other platforms, Upgrade, Upstart. So you're used to making these low-dollar, high-volume loans. Is this, I mean, where does this business go from here? When people say, well, wait a minute, the banks are going to make money from these loans and, you know, there's all these problems with how the process was gone about in the first place, what would you tell them?
I would tell them that this is really a demonstration that the bank partnership model actually works. And we've been doing this for a while, but, it takes a little bit of time to get adopted, particularly by the common banks, such as the community banks around the corner. But there is definitely validity in the business model. There's definitely a need. A lot of folks out there need loans, and they need accessibility to those loans. And providing accessibility to the fintech companies that are actually deploying a lot of marketing dollars in order to enable those people to have access to credit and access to, the small business loans that they so direly need is really the key to, unleashing the might of this economy.
Yeah, 100%. And I think
this is an integral part of what, the future of banking is going to be.
So are you guys getting involved in the Fed's Main Street program as well, or are you sitting on the sidelines for that?
No, we are actually. We've been exploring for the past couple of months. It's a little bit difficult and a totally different animal. I mean, the loan amounts are definitely bigger, which is a little bit outside of our sweet spot. But we also want to help the companies that do have the wherewithal to borrow a significant amount of money so that they can keep, like 100, 200, 300 employees, within their midst so that they can continue to pay them and have the, some staying power.